Welcome back to the channel. It's me, Adam. I hope you're doing well. We have lots to talk about in today's video. Even though I don't think I made any trades in the market, it was quiet from that standpoint. But in terms of dynamics in the market, lots is going on. So in terms of CPI data, inflation, precious metals, the dollar, the 10-year, stocks, things are going all over the place. So I want to get right to it. I don't want to waste any time. If you're new to the channel, welcome aboard. Hit that subscribe button here at Unlimited Options Investing. We talk everything from stocks, crypto, options, ETFs, and we're investing for the long term. As always, smash that like button and let's get started. All right, starting off, the consumer price index rose 0.4% last month versus a 0.3% rise anticipated by economists polled by Reuters. In the 12 months through September, the CPI increased 5.4%, up from a 5.3% year-on-year advance in August. Inflation is here, and I'm sure we all feel it. Not to mention the FOMC minutes, and the market and investors are expecting that the Fed is going to announce tapering sometime in November or December of this year. Now that's the expectation. Actually, last week on Friday, we had the non-farm jobs report come out, and that came out awful. We were expecting, I think, like 500,000 workers, and it was like just under 200,000 or something along those numbers. And Fed Chairman Jerome Powell was saying that he wanted to see a recovery in the labor market before beginning tapering and increasing rates and so on, right? So we're not really seeing that, but at the same time, we're seeing inflation running hotter than they were expecting. And we're literally short supply in like every sense of the word, in terms of labor, in terms of part, in terms of just everything. We're just behind schedule. The effects of the pandemic have been compounding, and we haven't been able to get over that hump yet. So inflation has been persistent. So obviously all these bottlenecks haven't been helping inflation whatsoever, right? So I want to take a look at the DXY, the US dollar currency index, and considering all the news, the dollar is actually down. And sometimes we can find correlations between the dollar index and the stock market and the precious metal markets and so on. But before even looking at either of those, taking a look at the TNX, the 10-year Treasury note yield. And despite inflation, despite the inflation that we've been seeing, we've actually pulled back. Now, if we break below this 20 EMA, that could be actually pretty positive for the stock market. Tech stocks could rally back into the limelight if that's the case. But really interesting seeing that dynamic. There were a lot of predictions out there that this was going to hit 1.75 or 1.7 in the near future, then eventually 2, and then go from there. And when we take a look at the SPY on the daily, it was up 0.36% for the day. You see a green hammer candle on average volume, but I don't look at this as a reversal hammer type of candle that we're going to continue going up from here necessarily, as we still kind of are choppy trading in a range. But if we do see some green into the end of the week and potentially above these moving averages, that could be a strong indication of a market recovery or a rally upcoming, or at least stabilization that we put in the lows back here in early October. And on the Nasdaq 100, we see a similar hammer candle. Again, we're within that bottom channel that we drew that dates back to the end of last year during the correction back in September, October. It's a pretty strong channel. It's holding up for now. We see that it touched perfectly back on October 4th over here. That may have been the low, maybe not. Again, until we see some kind of confirmation and testing back these moving averages, nothing is confirmed yet. And taking a look at the Dow, we see a little bit of a doji candle over here. And zooming out, we see this one's actually been trading in a channel between 337 and 355. So until this one breaks out and starts testing this resistance and coiling up nearby it, I'm not excited yet until we see a confirmation above this resistance over here at 355. And looking at the market futures, it looks like we're going to be opening up green. I mean, anything can happen between right now and the market open, which is in about 3 hours from right now. But this has been holding up since late last night, so I'm expecting it to open higher. So depending on how this today goes pretty much and how we close, could be a very good indication on, if we are recovering or not. So I'm going to draw it out. So let's say we gap up in the morning over here, okay? So depending on how this candle ends up shaping at the end of the day, again, depending on how the market closes, will give us a better indication if there is a confirmation toward the upside, or if we're rejecting and then going back down to similar levels that we've been hitting for the past few weeks now. So for example, today we gap up and then we go a little bit bullish, and then that's a really good indication because then we'd be potentially breaking these moving averages. But let's get rid of those lines, and let's say, for example, we gap up and then we go down. And we draw a red candle over here, we're kind of right back where we started. And looking at the FAANG index, Facebook, Apple, Amazon, Netflix, Google, as I always say, I wish it was Microsoft instead of Netflix. And if we take a look to the left in the past, whenever we're below the 50 EMA, just like we are right now, those points end up being really good buying opportunities. Now, that doesn't necessarily indicate that we're not going to go any lower from here. Again, make your own judgments and inferences. And quickly looking at the IWM, this one also is poised to be up 1% at the open. And as usual, this one has been trading in that range. I can't wait till it breaks resistance eventually. Hopefully it doesn't break the support line, because when it does break this resistance, if it does happen, then that would be really, really strong for the stock market, potentially with small caps, and then hopefully seeing big caps follow suit, because that would be really strong for the market. Small caps have been undervalued for quite a while now, and I would love to see this one rip to the upside. It's just a spring that's been coiled, and just wants to be released. All right, taking a look at crypto now. So Bitcoin has still been going strong. It's testing that $58,000 range. It got rejected earlier today. This is okay right now. What we're seeing, even if we see a pullback, we don't want to see anything really below 55,000. Or at worst 53,000, which is the top of the resistance over here, as well as probably where it would touch the 20 EMA. Anything below that would definitely not be good. But what we want to see next is some kind of coiling over here and then testing the $60,000 mark. And then after there, the all-time high, 64,000. Taking a look at Ethereum. This one's also looking really strong as well. If we see a pullback, we want to see it to the 20 EMA or this blue line at 3350, 3400. But again, seeing it coil over here, we want to see 4,000, test that, and then after that, if it breaks that, 4,400, and then going from there. But first, next stop, 4,000. And taking a look at Cardano, and this one has a much smaller market cap than Bitcoin and Ethereum, meaning a lot less liquidity, meaning it doesn't trade as technically as the other two. But this one's been trading in a range, and we can probably draw a channel around here, around the $2 mark. And another line over here, let's say at 240, 245, 250. And put it over here. So watching a trade between this channel until it either breaks the support line or the resistance line, and then going from there. And looking at the physical commodities, looking at gold. And this one broke up to the upside. So we've been looking at this for the last few weeks now, saying that it was on support. If it broke support, then it could have got a little bit uglier, but it looks like it touched it and it's recovered since then. And then based on the FOMC minute and the dollar going down, gold has gone up. Similar with silver as well. We've been tracking this one. It was right on that support for a long time. Critical support line. It found buying pressure, and then after today's news, right now it's testing that 50 EMA, where it has found previous selling pressure though over the past few months. See that over here, guys? So in September, we broke the 20 EMA, touched the 50, got rejected. Same thing here. Touched the 50, got rejected. Same thing here, same thing here. And lastly, I want to take a look at oil. So this one crossed the $80 mark a few days ago. We were watching this one as well. And taking a look at the weekly and zooming out, how high does US oil go? Honestly, I have no idea how high this one goes until it pulls back. However, if we do see a pullback down to the 77.50 mark, previous resistance could become support and could be a good buying opportunity for some kind of bounce to the upside again. Honestly, the markets are wonky places to be right now. Things are going all over the place. And if you had told anyone a year and a half ago when this all started where the markets would be today, they would think you were crazy. So whenever anyone gives you an idea, don't just shrug it off, because you never know when the craziness can happen. And you know when you say, I would never expected this to happen this way, well, that's just how things happen in life and I guess in the markets, right? So let me know in the comments below what your thoughts are on the market and what's been going on. As well as always, smash the like button, hit the subscribe button, and I will see you guys in the next video.